3 months ago, a man named Vince sat across from a mortgage broker. Vince was exhausted. He had spent the last 4 years saving money stringently to put a down payment on a home for his family. The broker typed Vince's social security number into the system, stared at the screen, sighed, and delivered the verdict. Vince's credit score was 615. The broker told him, "You're approved for the $400,000 mortgage, but your interest rate is going to be brutal, almost 7.5%. In the cold math of the financial world, that rate meant Vince would pay the bank $230,000 more in interest over 30 years compared to a man with an excellent credit score. $230,000. That is the price of Vince's blood, charged as an invisible tax just because an algorithm decided he was a mediocre customer. Vince asked if he could have 90 days to improve his score before locking in the contract. The broker gave a cynical smile and replied, "You can try, but miracles don't happen. Building credit is like growing an oak tree. It takes years. 90 days won't change much of anything in the system." The broker was vomiting the standard industry lie. 95 days later, Vince returned to the same office, the same glass desk, the same broker. The broker ran the system again. The color drained from his face. He actually asked if there was an error in the bank's system. Vince's credit score was no longer 615. It had violently jumped to 758. An excellent rating. In 3 short months, Vince annihilated the punitive tax and secured rock-bottom interest, saving his family's $230,000. How? Vince didn't commit fraud. He didn't hack the credit bureau servers. He didn't pay thousands of dollars to those shady internet credit repair agencies. Vince simply used a mechanical gear that was built into the bank's own algorithm, a structural flaw perfectly legal, hiding in plain sight. The banks, the managers, and the credit card issuers know this gear perfectly well, but they have a billion-dollar financial incentive to make sure you never, ever discover how to use it. I am Buck, and today I'm going to expose the control panel of the credit system. We are going to destroy the passive advice society gives you about waiting years for your credit to improve. I am going to teach you the legal loopholes that allow you to inject steroids into your credit score in a matter of weeks, reducing the invisible taxes the banks charge you to zero. This is not a basic economics video. This is an infiltration operation. Why does traditional financial advice keep good people trapped in high-interest purgatories for years on end? If you Google how to improve my credit, the system will vomit the same playbook at you. Pay your bills on time, keep your card balance low, don't open new accounts, and wait. Be patient. Wait 5 years. Wait a decade for your credit to mature. That advice is not factually a lie, but it is dangerously incomplete, and it is designed to benefit the lender, not you. Every month you spend in the fair or good credit category rather than excellent, you are bleeding cash. You pay more for car insurance. You pay absurd security deposits to rent an apartment. You get strangled on auto loans. The banks do not want your credit to go up fast. Pay close attention. A customer with a 660 score who pays his bills on time but rolls over a credit card balance paying 18% APR is the most profitable customer the bank has. They love this guy. If that customer bumps up to 780, he will start demanding lower rates, 0 annual fees, and the bank's profits plummet. The customer's ignorance is the institution's business model. To dominate the system, you first need to crack it open and look at the wiring inside. Your credit score, using the FICO model, is not a moral judgment on you as a person. It is a predictive statistical equation of pure coldness. The algorithm tries to predict one single thing. What is the probability of this guy defaulting on a debt in the next 24 months? The equation has 5 main weights, but let's focus on the lethal 3. 1. Payment history, 35% of the weight. Did you pay on the right day, or were you late? A failure here is a blood stain. 2. Credit utilization, 30% of the weight. What percentage of this limit the bank gave you do you actually spend? If you have a $1,000 limit and spend $800, your utilization is a terrible 80%. 3. Length of credit history, 15% of the weight. How long you have had credit in your name. It is the average age of all your accounts added together. It is in the third factor, length of history, that the master loophole Vince used days. Ordinary people look at this factor and feel powerless. They think, I opened my first card 3 years ago. My credit age is 3 years. I can't time travel and change the past. I can only wait to get older. That assumption is the chain holding you down. And here's the bolt cutter the banks hate. In the scoring model, there is a concept called authorized user. When a master credit card holder adds your name as an authorized user on their card, mechanical magic happens. The issuing bank takes the entire history of that specific account and does a copy and paste directly onto your personal credit report. The algorithm does not distinguish if you are the original owner or just the authorized one. The machine reads the imported data as if it were yours from day one, and the implications of this are almost a cheat code. Imagine your father or a mentor of yours has a Bank of America credit card he opened in 2005, 20 years ago. The account has 0 late payments and a $30,000 limit, but he only spends $1,000 a month on it. If he calls the bank today, which takes 5 minutes, and adds you as an authorized user, the system wakes up. On your next statement closing, an impeccable timeline of 20 years of credit with perfect history and massive limits is transplanted onto your Social Security number. If your average credit age was 2 years, tomorrow it could jump to 12 years. If your total lifetime limit was $3,000, tomorrow it jumps to $33,000. That is exactly what Vince did. His best man put him on 2 immaculate old cards. The best man didn't even have to hand Vince the physical plastic cards. The plastic was shredded at home. What mattered was the data umbilical cord. The transfer of statistical dignity was injected into Vince's profile, and his 615 score turned into 758 in 60 days. The bank had to swallow it and approve the excellent interest rate. The authorized user strategy is known by elite operators and repair agencies, but is kept under lock and key from the general public. But to execute this maneuver like a military operation, details matter, and one mistake can sink you. Here is the safety playbook. 1. The pureblood donor. The person adding you must have an absolutely flawless account, 0 late payments in the last 7 years. If your donor has a delinquency stain on their card, that stain will be transplanted onto your report like a virus. The donor must be someone you trust blindly, like an immediate family member. 2. The light load. The account being imported into your name must have low utilization. The limit should be high, for example, $20,000, and the balance shouldn't exceed 5% to 10% of that value. If your donor's card is maxed out, the import will destroy your score, not help it. 3. The risk fallacy. The primary donor assumes the risk of paying the bill, but if the donor does not give you the physical card and does not give you the app password, which I recommend be the agreement, they have 0 risk. You cannot buy anything. You are just a passenger on the data conveyor belt. And if the strategy is no longer needed, the donor calls the bank, removes you, and that history disconnects from your name in 30 days. But what if you don't have a wealthy family? What if you're a lone wolf in the market? The system has a second massive loophole focused on factor number 2 of the algorithm, credit utilization. I call this statement date hijacking. As we saw, utilization is worth 30% of your life or death grade in the market. The general rule is keep usage below 30% of your limit. Experts say keep it below 10%. But here's the fatal ignorance of the masses. People do not know when the bank takes the snapshot of your debt to send to the credit bureau. They think it's on the payment due date. You are an exemplary citizen. You have a card with a $5,000 limit. During the month, you spend $4,000, but you pay it all off, in full, down to the last cent, on the due date. You think you are killing it. You don't pay a cent in interest, but to the algorithm, you are an irresponsible maniac. Why? Because the bank reports your utilization to the credit bureaus on the statement closing date, which usually occurs 20 to 25 days before the due date. On the day of the snapshot, the closing date, your card showed 4,000 owed on a 5,000 limit. Your utilization was reported as an abysmal 80%. The system tanks your score, and you are left confused because you pay everything on time. You are being punished by the system's delay. The loophole? Date hijacking. You're going to look at your bank app today. You will find the closing date, not the due date. If the closing date is the 15th, you are going to prepay almost your entire balance on the 13th. You pay the bill before the bank closes the ledger and takes the photo. You leave only $20 on the card so it doesn't show zero activity. On the 15th, the bank takes the photo. It reports to the credit bureaus that your utilization is an incredible 0.5%. 0.5%. The algorithm interprets you as an absolute minimum risk human being. Your score experiences a growth spasm of 20, 30, or 40 points in a single night, just because you changed the date you tapped the pay button on the app. No other change in your life was necessary. If utilization is a mathematical fraction, balance owed divided by total limit, you can fix the equation by decreasing what you owe, as I taught above, or you can increase your total credit limit. And this is where the third black hole of the industry comes in. Consumers are trained to be afraid of asking for more limit. They think it looks like desperation. But robust financial institutions, like American Express and some Chase and Discover lines, have automatic limit increase request buttons in their apps that run via a soft pull. A soft pull is a superficial credit check that does not ding your score, unlike applying for a new card. If you have a card with a $3,000 limit and you spend $1,500 a month, your utilization is a dangerous 50%. You log into the app today and hit the automatic limit increase button. If your history is clean, an artificial intelligence often approves double the limit instantly. Your limit goes to $6,000 without speaking to humans. Immediately, without you changing a single spending habit in your daily life, your utilization rate plummets from 50% to a harmless 25%. The math pushes your score up for free. The relentless operator asks for limit increases every 6 months, inflating the base of the denominator to crush the utilization rate, even if they have no intention of using that extra limit. The fourth lethal tactic is about retrograde bleeding. Low-tier finance magazines say, "Never close credit card accounts. It destroys your history." That is cowardly, dumbing down advice. The rule is not blind. If you close your oldest card of your life, the one from your college days, yes, your average age of accounts will drop and you will bleed points. But what if you are the type of person who over the last 3 years opened 5 useless little department store cards, Macy's, Home Depot, just to get 15% off a purchase? Those accounts are open, useless, with very low limits, acting as easy targets for hackers and dragging your average age of credit down because they are very new accounts. The strategist goes into culling mode. He calls those retail financiers and executes the closure of those recent irrelevant accounts. He simplifies the portfolio. By executing those young accounts, the system recalculates your average using only your older, robust cards. Your history artificially ages and your grade goes up. Less garbage, more efficiency. And for those in a state of emergency, those who need to sign a mortgage or auto loan next week, and found a penalty or error on their score, there is an elite weapon called rapid rescoring. Credit bureaucracies take 30 to 60 days to update a payment or correction under your name. If you paid off that maxed out card yesterday to free up credit, the bank will only notify the bureau next month. But you need the apartment today. You do not have access to this weapon, but your mortgage broker does. The rapid rescore system allows the broker to force a real-time update in the Equifax or Experian database, proving it with your paid receipts. In 72 hours, the system updates your zeroed-out debt and projects your new excellent credit grade on the bank's screen. What would take a month and a half of agony and lost interest is resolved in 3 days of corporate negotiation. Tactical knowledge liberates, ignorance taxes. What all of this should have made clear to you is the cold reality of how the financial world views you. The credit scoring system, wherever it is, was not built to help you build wealth. It is not your middle school teachers who wants to see you pass the grade. The system was designed and calibrated by millionaire lenders to protect millionaire lenders. It was built to categorize you as either a sheep to be sheared with high interest, or as a partner demanding respect with low interest. The entire system profits massively when the average citizen believes that improving their financial life is a mystical, esoteric process full of humiliation and waiting. The banks make billions in revolving interest from financed cars of clients who think having an average score is their lot in life. Monitoring companies sell you fake security subscriptions so you can watch, terrified, as your number goes down. The ultimate truth is that the algorithm is mechanical. It has no feelings and does not judge your soul. It follows fixed rules. And fixed rules can be studied, deconstructed, and optimized through lethal and precise tactics. Vince, from our opening story by jumping over 140 points in less than 100 days, did not cheat the laws of men. He operated within the rules of the game they themselves wrote, but hid behind the curtain. By mastering these mechanics, Vince ensured that $230,000 of sweat and blood did not go into the bank's shareholders' accounts, but rather into his own family's future. The knowledge that liberates does not come in the colorful pamphlets of bank managers. The knowledge that armors you comes from tactical intelligence, discomfort, and the methodical application of ruthless processes. If you are tired of paying the ignorance tax, if you have realized that the small operational weaknesses in your daily life are being capitalized on by the corporate system, draining your options and enslaving your future decisions, you do not need a weekend of motivation. You need an unbreakable code of conduct and a logistical battle plan. I have spent the last few years deconstructing these traps, one by one, and compiled the weapons and strategies into the definitive operational map for your independence. It is called The Order of the Day, 365 High-Impact Actions for Your Financial Sovereignty. This is not an ebook with academic theories. It is an assembly line of armored attitudes. The manual will hand you the exact scripts and architecture to annihilate the hidden fees in your life, exactly as we did here with the credit system. It will teach you how to lock down your income perimeter and redirect the energy that was going toward blind consumption into an infinite optionality fund. It will provide you with the daily actions to install friction in your finances and break the emotional algorithm in your head and the predatory algorithm of the banks. Access to the doctrine of the order of the day is unlocked. The official operation link is positioned right below in the description of this video and pinned in the first comment of the page. The value you apply to this manual to access this information is insignificant compared to the financial massacre of signing a single loan or mortgage contract while sitting on the passive, uninformed side of the table. The return on this investment is absolute control of your capital. The corporate machine wants you to stay confused, patient, and bleeding interest. The choice to take back command and flip the board is exclusively yours. The ammo is down there. The link awaits your action. Keep the numbers in check, lock down your perimeter, and do not negotiate your freedom. I am Buck. Tactical instruction ends here.